shows up there anyway, so that's not that big a deal. What do we got here tonight? Hey, Joanne's here. Or Joan. Is that Joan or Joanne? I don't know. Mark Cosby. Okay, Doc D's here. Doc D. Doc, what do you do? Kind of curious. You're not the only doctor here. I got like 4 or 5 doctors that actually come here and see this kind of stuff. Detour. James. Young boy. It's hard to be called James there, James. Join. That's a weird thing. All these people just showing up, just showing up, just showing up. Look at all these people. Doc, you still haven't told me what you do yet. Okay, we have one doc here, Doc Botox. That's exactly what he does. He does Botox shit. Injecting shit into people consistently. Here's what it is. All right, what am I doing? All right, I'm getting this one over here up and running. There we go. There we go. There we go. Add title. Dividend stock talk. Done and live. Here we go. Now we're up and live. Olivia, Memphis, how are you doing today? Mikey 16's here. Square Sauce Media. Now that's an interesting name. David Hurst. Summary statement, please. Friday options. Summary statement, please. Summary statement, please. I'm not quite sure what you mean by that. You have to give me a little bit more detail, because I'm not quite sure what you mean by summary statement. Kev, how's it going? Larry's here. Way to go, Mr. Larry. Nice to see you. More acts and likes can get to more viewers. Right now we are at 92. There are 92 people in the house. Woo-hoo. It's a Sunday night. Sunday night is usually the biggest night, because that's why people are not doing a whole heck of a lot. But how did it go? Oh, you mean for this past week? Sold 2, carried over 5. So this week I'm going to be looking to pick up 2 more. Hey, Mr. Homeless is here. So this week I'm going to be picking up 2 more positions. More than likely, I'm going to be fishing up Macy's again and MPW again, or MWP, whichever it was. Okay, some of the comments are going to be filtered. Yeah. Okay, join the live. Mr. Homeless, join the live. What we picking up? Well, more than likely, I'm going to be picking up some more MPW and some more Macy's. You know what? Let's get to it. Let's take a look at Macy's right now, and I'll tell you why I'm getting Macy's again. Now, I just sold my Macy's, okay? I had 3,700 shares. I just sold them. All right. So let's take a look at Macy's. First on the list today, Macy's. All right, so what we can see first thing I always want to look at, always want to look at the numbers. What am I buying it for first thing Tuesday morning? Now, tonight's Sunday night. It's usually a good night. You know, the audience is usually a halfway decent-sized audience. Do you think Macy's a bit too high to buy now? Maybe, Julie. Howdy, landscape executive, back again. But Julie, you have a good question. That is a valid point. Well, look where the high of the year is. The high of the year is a little over 22. Right now, we're only at 20. Do I have enough space for a 1% increase? Well, a 1% increase is only 20 cents. Okay, so there's plenty of space between the high and where we currently are. And I like Macy's. AGBA. Really, Brian? AGBA. I've never heard of it. Michael Larry back pumping Walgreens. Woohoo! Wait, we'll take a look at Walgreens. Why not? You know what they say? If the numbers work, why the hell not? Okay, so we'll take a look at Walgreens. WBA. We're looking at Macy's right now. What else do we want to take a look at? AGBA. AGBA. And then Apple. AAPL. Paramount. Ooh, somebody likes Paramount. I like Paramount too. PAR. Hey. All right, so let's take a look at Macy's. And let me explain to you why I like Macy's. Well, Macy's, number one, is over 100 years old. Okay, that's number one. Number two, they consistently increase their dividends every single year for more than 5 decades. AVGO, really? What's your pharmaceutical pick? Oh, I don't have one. AVGO. We'll take a look at AVGO. And I don't isolate my stocks by what they do. Okay, my stocks are isolated by this right here. Okay? This is how my stocks are isolated. I have no idea what any of them do. Seriously. Well, I shouldn't say that. Comcast, everybody knows what Comcast does. Cisco, JP Morgan, American Express, Bristol Myers Squibb, MasterCard, AT&T, Verizon, GIS. Oh, that's not Whirlpool. No, General Mills, General Dynamic. Other than that, I have no idea what they do. I base all my picks on the calendar. When are they paying their dividend? That's the only thing I care about. Number one, are they increasing their dividends every single year? Number two, do they have weekly options? That's basically it. Please, sir, will there be a lesson for a newbie today? Is Bristol your pick? BMY, Bristol Myers Squibb? I think it's right there, wasn't it? BMY? It's there somewhere. But BMY is on the list. I'll write it down. BMY, Bristol Myers. Okay, so let's go back to where we were. We're still talking about Macy's. All right, so if I buy Macy's first thing Tuesday morning, okay, I can expect to pay $20.25. Okay, the current high is $22.10. Okay, so this is still below the high. So there's still enough space for it to go up and me still make my profit and get out without challenging that new high. So I'm okay with that. Okay? So at 2025, the 20s are going for 56 cents. I deduct the 25 cents off because I'm losing 25 cents. That means I'm only making 31 cents. 31 cents is over 1%. But I might go with the 2050s and get 33 cents because 33 cents is better than 20 than 31. And I get the difference between the purchase price and the strike price. But then again, it has to go up above 2050 to be called out. I don't know. I might just go with the 20 and take the 1% and be happy with it. Okay? I like Macy's. Now let's take a look at the chart to see if it is a good time to buy it. Okay, the very first thing I always want to look at with any chart, very first thing, any chart, where's the high? Where's the low? Right around here somewhere. Looks like it hit like 4 times. Look at that. There's the low. Where was it a year ago? And where is it now? Now, for those of you guys that are new here, just got here, this screen here, right here, this screen here is live on YouTube. So you actually YouTube and actually see it. We're at 33. Shit, man, I got to reboot again. Sorry, we're at 187. Now we're down to 33. I must be doing something wrong. I don't know what it is. Maybe people just aren't interested in money on a Sunday night. It is Sunday night, right? All right. So anyway, high, your low, where was it? Where is it? Let's look at the last 90 days to get an idea what this thing normally does. Okay, so here's the last 90 days. First thing I want to see. Yeah, it is a long weekend. Is the high, the low, where was it, and where is it? Look at where it is now. A nice steady up climb right there. Here's bottom right here. Well, here's the previous 90-day bottom. Here's the next one. Look at that. Nice movement to the upside right there. Here's our top. How far away are we from that top? That's plenty of space to go from here to there. Okay, in the previous bottom here, not even close. This thing is going to the upside. Hypothetically speaking, it's not guaranteed, but you know, it is what it is. So the last 30 days, we are in the 26th. Your 30-day bottom, 30-day top. Okay, here's a previous bottom here. Okay, so here she pulled back, jumped up, pulled back, now she's going to the upside. So you can take a look at the chart, the past 30 days. She's going up. See that? From this corner here going to the upside. You can't fake that shit. That is basically what it is. All right, we're at 33. I've never been at 33. Let's reboot. It's you got to be kidding me, really? $33 people. That's insane. All right, got those things there. Wow, I got my tools scattered all over the place. All right, we're getting this thing started all over again. Let's see if we can get a little bit more than 30 people. That was ridiculous. All right, Art, Al, how you guys doing? All right, let's keep this party rolling. All right, we're looking at Macy's. I like Macy's. We all know that I like Macy's, and there's a reason why I like Macy's, because they continuously give me a nice premium every single year. So why wouldn't I continuously have Macy's? ORC, Oracle. ORCL. Okay, Oracle or AT&T. All right, we'll take a look at those two. Why not? All right, Art, we'll take a look at those. All right, take a look at AT&T right now. $17.51 for AT&T. That's what I can expect to pay Tuesday morning. $17.50 is going for 12 cents. Sorry, dude, that's not even 1%. That's actually horrible. All right. But if you like AT&T, hey, you know, you're getting 12 cents off a $17.50 stock, which is what, 0.8, which is still 35% for the year. If you continue to do it every week, and you continue to get 0.8%. All righty. All right, so AT&T for me personally is going to be a no. I take a look at it. The numbers just don't look right. But look at the chart. It's in a nice steady up climb. It is. If you like AT&T. I just don't happen to not like the numbers, because the numbers really aren't working that well for me. Okay, either the numbers work or the numbers don't. I look for a safe, secure, predictable, consistent 1% per week. And AT&T is not it this week. Hola, Troy. How are you doing tonight? All right. AT&T is going to be a no. So let's take a look at Walgreens. I like Walgreens. Walgreens is an HMI, really? Troy, HML. 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 I've never heard of HML. What is that? Out of curiosity. AT&T is a no. We're going to look at Walgreens, WBA. Now, WBA kind of got me a little bit on the excited side. Oh, Troy, Hormel, that's HRL. Okay. HRL is Hormel. Yeah, I don't know what HML is. Yeah, we're going to take a look at Verizon. Verizon is on the list. VZ. All right, see, Verizon's on the list. We'll take a look at that in a little bit. How about Amazon? Right to the point, that's a big fat no. Okay, Byron? No to Amazon. Why? Amazon does not share dividends. Why would I want to have my money invested in a company that does not share the profits with me? Every one of the companies I look at share profits. I'm at that point in my life where I want a safe, predictable, consistent return every single week. I'm retired. I do not want to have to go back to work. It's kind of nice to live off of my interest. Oh, I made this much. Great. Wonderful. GPS, the Gap, L, we'll put that on the list. GPS. All right, we'll take a look at the GPS. Yeah, I like that better. 118 people here at least. At least I got 100 people in the audience. You guys, don't forget to like, share, comment, all that kind of nice stuff. That way we can share the information with more people. I mean, let's not be. Do you like LAND? All right, Brenda. Is that Brendan? Brendan. I've never heard of it. Okay, so Brendan, you're new here. I can tell by the name. We're going to look at GPS. GPS is the Gap. Okay, what's poppin', Gene Arnold? Good stuff. All right, so, Brendan, you're new here. If I say I never heard of a company, that means it's probably going to be a no. The reason why I'm saying that before I even look at it, because I'm looking for specifics. Okay, I'm looking for companies that have increased their dividends for 20 years, every single year, higher and higher and higher dividends. Also, weekly options available. So this way I can do a covered call every single week and get a safe, predictable 1% per week. So usually when I say I've never heard of it, it's usually I'll take a look at it and give you my opinion. They have monthly dividend payouts. Okay. Hello, can you do a quick short-term chat about CELH next? Levi, more than likely, it's going to be a no, but, I'll take a look at CELH. Because you guys don't understand, I've been doing this for over 20 years, CELH. So if there's a company out there that has 20 years or more of increased dividends, more than likely I know who they are. Because there's only about 100, maybe 200, maybe 300 if lucky. AT&T is on the list. We're going to take a look at that one. GNOws, you made 1% last week. Way to go. For you guys who don't know, GNOws has been here, I think, since January. Have you been here since January? GNOws every night, just about? Not every night, GNOws, but often. All right, so WBA, Walgreens. Now, we've heard a lot of news about Walgreens going down, 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 but here's the reason. You've been here since February? Cool beans. There's a couple people got you beat. There's a couple people been here since January and still show up every single night. It amazes me. I'm not really that entertaining, but it's still flattering. Anyway, Walgreens. There's been a lot of bad press lately. Why? Well, because there's a lot of crap going on in society, and I don't get me started on that. Let's just go to the numbers. I'm strictly a numbers guy. If the numbers work, great. 1607 at $16.07. The 16 is going for 26 cents. Take 7 cents off of that, and I'm getting 19 cents. 19 cents is more than 1%. So Walgreens is going to give me 1%. Now, I got 3% on Paramount. Well, good to go. Good for you. How's the arm? Well, you know what? Look at this. I can get up to there before it starts to hurt. And up to there before it starts to hurt. But 2 weeks, it's not bad for an old man. 2 weeks, and I got a lot of my movement back. All right, so WBA, Walgreens, is going to give me the money I'm looking for. I'm looking for that 1%. Okay, so what I'm looking for now that the numbers work, I want to see what the chart looks like. And I'm really excited about the chart. You know why? Look at this. From last year, the high, it's been going down, 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 until Thursday. Thursday was officially the bottom. Okay? Frozen shoulder, no, broken collarbone. Broke my collarbone playing soccer 2 weeks ago. Yep, I'm actually old enough to be in the over 60s club. I just started watching, but a shout out if I would have gotten into cold on Tuesday, made it 56 cents. Oh, good for you. Cortisone shot. Nope. No way. I don't do anything. No. Can you flip your screen? Unfortunately, no. What position? Oh, I was playing left fullback. I usually play center halfback. But I'm 60. I can't run like I used to. You get the guys in the 40s, the 40s and 30s. They're playing, center halfback nowadays. Hey, I got Darznik over here. How's it going there? Yeah, so the younger guys, here I am, 60. I'm saying the younger guy, because our son of fullback, he's going to be almost in his 70s. But anyway, it was a good game. It would have been better if I didn't freaking break my collarbone. All right, Kohl's premiums going to be nice with earnings on Thursday. All right, I'm going to put Kohl's on the list because I do like Kohl's. Kohl's has been a big winner for me this year. What were you saying about option spread? We're going to get that in a minute. Kohl's. Yeah, I don't do any of that. I don't even take pills. Please talk about JEPI. All right, JEPI. Here's my conversation about JEPI. Are you ready for this? It's going to be very short and sweet. No. Why am I saying no to JEPI? JEPI is an ETF, electronically traded funds. It means you're giving your money to a computer to invest it for you. Okay? I can almost guarantee you 100% accuracy that the rate of return JEPI giving you sucks. That's just my opinion. Can you check out WBA? We're looking at WBA right now. But JEPI, I wrote it down. Okay, if you hang out long enough, you'll see why I don't like JEPI. I made 1% in a day and a half last week with Macy's, Kohl's, and AEO. Gee, now it's good for you. JEPQ, same thing. No. Maine, same thing. No. The numbers just don't work. It is very simple, people. It's very simple. If it doesn't give me a consistent 1% per week, consistently, safely, and predictably, 3. Consistent, safe, predictable, 1% per week. It's a no. JEPQ, no. JEPI, no. MAIN, no. SDHD, no. VOO, no. VCI, no. Any one of those ETFs, it's always, always, always no. I've never found an ETF that could give me 1% per week. It worth with monthly dividends. Yep. Both return monthly dividends. Yes, they do. But just for the fun of it, Remerald. Okay, Bitto. Haha, yeah, throw that one in. And then your Walgreens is almost bankrupt. No, it ain't. Walgreens has been in business for over 100 years. They ain't bankrupt yet. Okay, and Walgreens, just in case you didn't know, check it out. What was that? April 1st, look at the high, 22. Comes down, goes sideways, a little bit of peak here at 1850, drops down to 16. To 16 on Thursday. There can only be one bottom of the year. Now, anytime you see a stock and you think to yourself, oh shit, I wish I got in at the bottom. Well, here's a big red flag for you right here. That's the bottom. At this moment in time, Thursday was officially the bottom. Friday, she moved up. Okay, so at some point, there is going to be a bottom. And at some point, there is going to be a top. If it was worth more than 22, it would have went higher than 22. But apparently, it's not. And if it was going to go lower than 16, it would have gone lower. But at this moment in time, if you take a look at the whole year, the high was what, 33? And then she just kept on falling. And you now know where the bottom is. The bottom's right there. What's your strategy? It's a falling system like stairs or Rite Aid. It could very well be. What's the chart time frame? Well, this chart time frame right here is 1 year. I look at the 1 year chart, I look at the 90-day chart, I look at the 30-day chart, then I look at the seasonality chart. How do you determine whether it's safe to sell a covered call on the stocks you own? Well, Brendan, let me ask you an interesting question. The company's over 100 years old. That's number one. Number two, they've increased their dividends consistently every single year. Number three, there can only be one high of the year, and there can only be one low of the year. So, anytime, the best time to buy a stock is at the absolute bottom. Where can you find the bottom? Well, you can only find the bottom. Hey, Doc, I saw you sneak in there. I did. How's it going? Go talk, Doc. Where are you? You down south or you up north? When I talk about that, I don't know. It returns 6% dividends quarterly. How do you get 1% weekly? Well, I'm about to show you that. Okay? Hold on a second. Now, this company right here, Walgreens, you want to find out where the bottom is. Well, where the hell is the bottom? The bottom is the bottom. It's as far down as the stock's going to go before we, the buyers and sellers, say, wait a minute, Walgreens is worth more than 16. Why do some stocks have 120% dividend like Zim? Zim does not have 120% dividends. Terribly sorry about that. Do you think Walgreens, it could be on its way up? Well, what we're getting at, okay, you guys, seriously, you guys are new here, okay? I will answer all your questions. You're just going to give me a little bit of time to answer them. For you, Ramalds, I don't know how to pronounce that. 1%, here you go. If the purchase price is $16, $16.07, a covered call is basically you buy the stock, and you sell someone the option to buy it from you for basically the same price you paid for it. So if I'm buying it for $16.07, if I'm selling it for $16, I'm losing 7 cents, right? But I'm collecting 26 cents per share. 26 cents per share is more than 1%. Even if I take off that 7 cents that I'm losing, okay, so I take the 7 cents off of there, so now I'm only bringing 19 cents. So what is 19 cents on a $16 stock? For that, we're going to need my calculator.
Come on, Mr. Calculator. What the heck is that all about? Okay, so I'm bringing in 19 cents, and it's a $16 stock.
Okay, that's 1.18%. 1.1, almost 1.2. 1.18% for the week. So as long as the stock stays above 16 come Friday, because if I'm buying it on Tuesday at 16.07, I'm selling someone the rights to buy it for me at 16. So I'm buying it for 16.07, selling it for 16. I'm losing 7 cents, but yet I'm gaining a 26-cent profit. So in actuality, I'm selling it for 16.26. But I'm buying it for 16.07, so I make 19 cents a share. 19 cents a share is well over 1%. It's 1.1% to be exact. Now, considering this has weekly options, I can do this 52 times a year. Now,
just in case, because you're new here, I want to show you something that you probably haven't seen before. Okay, this is my website, The 10-Minute Trader. Okay,
the10minutetrader.com. Now we're talking about Macy's.
Each one of these is 1 week. Okay, this chart, this account over here is all cash. This account over here is margin. Just to get an idea what a margin account is going to do as opposed to a cash account. So let's kind of take a look at Macy's. Look, Macy's, week 1. Macy's, week 2. Macy's, week 3. Macy's, week 4. Macy's, week 5. Macy's, week 6. Macy's, week 7. Macy's, week 8. Macy's, week 9. Macy's, week 9. Macy's, week 9. Macy's, week 10. Macy's, week 10. Nope, got rid of it then. Don't have it on week 12. Don't have it on week 13. Week 14, Macy's. Macy's, Macy's, week 15. Week 16, Macy's, Macy's. Week 17, Macy's, Macy's. Week 18, Macy's, Macy's. Week 19, I haven't posted yet. That was just last week. And for week 19, I had Macy's. Okay? Zim started in 2021. Yeah, more than likely, they're not going to continue with that crazy dividend. I only look at companies that have 20 years of dividend increases. Zim will not show up on my list for at least another 18 years.
So I have a question for you, okay? Who likes Zim? Who's the person who likes Zim? Hassenpfeffer? Really? You're the one who likes Zim? Or David? All right, so David, you like Zim. Zim could be a dividend trap depending on timing, correct? Why do some stocks have 120% dividends like Zim when they're trying to attract buyers? So David, basically from what I've heard, I haven't really checked myself.
Let's do a quick check, just to be on the fun side. Okay, we're going to go to Yahoo Finance, and we'll put Zim in there.
Zim has no dividends.
Okay, history, Zim. Okay, Zim, Integrated Shipping Services Limited,
CIM.
Slide on down.
There are no dividends in the selected time period. Okay, so when you're saying Zim has 120% dividends, Yahoo Finance is saying Zim has no dividends at all. So I'm not quite sure what you're getting at. Okay? Now, I trust Yahoo Finance.
All right, if we don't like Yahoo Finance,
okay, do you like Yahoo Finance? How about search?
Zim Integrated Shipping does not have any future dividends. The last dividend paid out to investors was 2023.
Okay, they're not doing any more dividends. Why would I do Zim? Why would I even bother wasting our time looking at a company that doesn't offer dividends? So Zim is a big fat no.
All right, let's get back on track.
We're on WBA. So as I was saying, WBA,
the last 30 days, Here we go. Last 30 days. 30 days ago, we're 1820. Okay, high at 1880, bottomed at 16. Bottom at 16. If you want the best time to buy a stock, the best time is to buy at a bottom. 30-day high, 30-day bottom, 1 day to the upside. I would feel a little bit more secure if Monday or Tuesday it would continue to the upside. Now, if Monday or Tuesday is the downside, then it may make me a little uncomfortable. All right. Oh, I missed some of these questions. It was me, PBR. Cool stuff. I like it. David, I was just curious how it could have. Okay, David. Hasselpepper, I got out. Zim was great for me. Okay. I'm not telling you. Okay. Would this strategy work for Coca-Cola or the stock flat stable share price? Now, Coca-Cola, don't get me wrong. Coca-Cola has been in business for over 100 years. I can almost guarantee they're going to be making Coca-Cola the next 5 or 10 years. Almost. Because they have more than one Coca-Cola plant, and Coca-Cola is worldwide. It's not, just the number one soft drink in the United States. It's the number one soft drink worldwide. So yeah, Coca-Cola. But Coca-Cola has absolutely horrible premiums. What do I mean by that? KO. Okay, Coca-Cola is going for 62.08. 62 is going for 36 cents. That's a 0.5%. Don't get me wrong, if you like Coca-Cola and you don't mind getting a 0.5% a year, that's still 25% per year if you just do the covered calls and collect the dividends. So you do a covered call, collect the dividend. Do a covered call, collect the dividend. You do week after week after week. That's why I like companies that have weekly options. And Coca-Cola is one of the best ones out there. They have increased their dividends for more than 60 years. That's 6 decades. 6 decades they've increased their dividends. Okay? They're going to continue on doing it. So why not? I was asking the question. All right, David. Would the strategy work for Coca-Cola? Probably not. Stock. Zim was paying huge dividends, but the stock tanked. Yes, it did. Zim foreign tax withhold. Monday close correct. Back to Walgreens. Yep. Please, sir, sending you my text after this live. Okay, Mr. Homeless, you got it. A 1 year timeline. WBA is not near its bottom. Okay. Coca-Cola is phenomenal. 07. It was $60. Okay. I'm not going to argue with anyone. Seriously, I don't want to argue with anyone. Now, Houdini, when you say 1 year timeline on WBA, it's not near its bottom. WBA. All right, so we're going to go to this chart right here. All right, so this is a 1 year chart for Walgreens. Okay. Yes, your chart was 1 year. Yes, it is. One more question. Do you do this inside a tax sheltered account like no, it's actually in a corporate account. Taxed totally differently. All right. So here we go. From January, I'm sorry. From, what is that? 6, I don't know what the freak that is. What date we looking at here? 5/26/23 to 5/26/24. Okay, a year ago, high 32.89. This is a whole year chart, whole year. From there, she up, down, up, down, up, down, up, down, up, down, up, down, up, down. The low of the year, 1589. It's right there. I don't know why you're arguing with me about the low of the year. It's right, big, huge numbers and letters right there. This screen is live on YouTube. If you can't see the numbers on your phone or your iPad, whatever, this screen is live on YouTube. Okay, there's 2 lives on YouTube. One, basically what you're looking at. Okay, and the other one is basically just the screen behind me. I can wave over here. It's me, Lex. How you going there, Lex? Over there on Instagram. Okay, so with that being said, if you do British Petroleum, compare it to ConocoPhillips. One more question. Do you do tax? I already answered that question. All right, British Petroleum and COP, ConocoPhillips. BP and ConocoPhillips. We'll take a look at those. Okay, right now, we're just finishing up Walgreens. Apparently, somebody was arguing with me. The one-year chart wasn't showing the low. Well, I'm pretty sure the one-year chart is showing the low, which was Thursday. Friday, she closed higher than she closed on Thursday. So Friday was an up day. Thursday, at this moment in time, Thursday is the bottom of the year. If you're looking for an absolute bottom of the year, it's right freaking there, Thursday. Friday, it was 1603. Thursday, it was 1589. Granted, it's only 4 cents different, but it's still higher. Is the high still 1%? Houdini, I don't know what you mean by that question. Is the high still 1%? I don't know what that means. I mean, I consider myself a relatively educated person, but that's more of a statement. Is the high still 1%? I have no idea. Let's go on to the next stock. All right. AGBA. I have no idea what that is. And I can usually guarantee when somebody gives me a stock that I've never heard of, it's usually going to be a no. ABBA. Agba Group Holdings. Yeah, that's a no. Okay, 2 reasons. Number one, it's a $2 stock. There's no pause. What the hell was that? There's no possible way that can have 20 years of increased dividends at $2. And it doesn't have any options, so it's a freaking no. 20 years of increased dividends. 20 years of increased dividends and weekly options. No options, it's a no. Okay, you can't possibly have 20 years of increased dividends at $2.60 a share. Why do you call stocks she instead of they? Because they're temperamental. Because you never know what they're going to do next. How's that? That's a good one. You never know what they're going to do next. They're going to go up or they're going to go down. That's all. Krabby 3. Crappleby 3. That's an interesting name. All right, so the next one on the list, Apple. Okay, we all love Apple. AAPL. And if you don't love Apple, you probably should love Apple. Apple is a very nice play most of the time. Can't be a she. They make your bank account bigger. Yeah, someone's been lying to you. What are you going to name Macy's and Kohl's? All right, Apple. 190. The 190 is going for 143. Sorry. No, not this week at least. Sometimes it's a yes, sometimes it's a no with Apple. It's not always guaranteed. Paramount. Ooh, Paramount has been paying nicely lately. PARA. First thing, 11.97. What's the 12 going for? 29 cents. That's over 2%. Over 2%. Can't be she. They make it count bigger sometimes. OHI pays a good dip. OHI. Houdini, are you going to start with me again? Are you sure OHI has 20 years of increased dividends and weekly options? Before I write it down, because I've never heard of it. I've never heard of it. It's usually going to be a no. OHI. All right, he's sticking to his guns. OHI. All right. So let's take a look at Paramount. 11.97. The 12's going for 29 cents. So let's clear this out of here. And let's say 29 cents. I'm going to divide it by the purchase price, 11.97, and that comes to a grand total of 2.42. 2.42. OHI for dividends. Maybe not 20. Maybe quarterly. I don't know, Houdini. You put it up. I'm going to take a look. I'm going to hold you accountable. Okay? We're looking at Paramount at the moment. Let's check it out. Paramount. You guys know who Paramount is. Okay, they make movies. They've been making movies for over 100 years. Okay, first thing I want to see, where is the high? Right here in December. Where's the low? Whoa, double low, March and April. See that? March and April. Where is it right now? 1196. Where was it a year ago? 15. That's not that big of a discrepancy between 15 and 12. That's not that big. Okay, so last 90 days. Okay, so we have our double bottom. March and in April. Okay, she goes up, pulls back, up, pulls back, up, pulls back, up, pulls back, up, pulls back. Look at that. Up, here's your high right here. Your 30-day high. Let's go to the last 30 days. Okay. So, 30 days ago, we were right around 1250. All right, you see that? 30 days ago, right around 1250. She drops right here toward the end of May. The end of April, beginning of May. Okay, so May 1st, we're at the very bottom. 4 days later, we're at the very top, 1452. Okay, then she comes down, pull back, down, pull back, down. Here's your new bottom right here. Not a 30-day bottom, because your 30-day bottom's over here. So here's your new bottom here. 1 day to the upside. So Monday, hypothetically, if it's green, that's a good sign to jump in to get 2%. And I think Paramount I have written down. I don't. Well, I'm going to write it down now. Okay, wow, I got 8, 10. I got 10 circled and written down. So if any of you guys have been following me for a while, you know when I write it down and circle it, that means it's a contender for the next week. So I'm going to be taking a look at that one. Why is Foot Locker premium so high? Well, we'll take a look at Foot Locker. Would you do Paramount even though the EX date is passed? Well, Doc, if they're paying me, how much are they paying me again? 2.4%. So ask yourself a question. At 1%, yeah, I'd wait for the dividend. But at 2% or 2.5%, I may, bend a little bit. There's certain companies I'll bend on. Now, a company that's on my roster, okay, that's cheap, and $12 is cheap. I mean, how much are you going to lose on a $12 stock? Especially if the $12 stock is paying you 2.5% just for the week. So there's a lot of deciding factors. 2.4% is one of those deciding factors. PBR, really? All right, I got that Secretariat. 6/17, which is a couple of weeks away. Not in June. 17, so that's in the middle of June. We're already looking at the second week of June. Third week. Yeah, so yeah, Paramount is right up on the list. Let's take a quick gander at it. EARA. Boom. May, June. I should probably spell it right. That would probably be helpful. Okay. Monday's the 27th. Okay? Monday's the 27th. 2 weeks out is the 10th. Paramount is 3 weeks out. Now, I have no problem whatsoever buying it 3 weeks at a time if I'm getting 2%. So if I get it here and I get my 2%, I'm out Monday, I'm out Friday, I will take a look at it again on the 3rd to see if it's paying out again, because the dividend is right here. All right, I like getting in just before the dividend's paid out. When you jump in before the dividend's paid out, there's a tendency for the stock to move up. If the stock moves up, that means I'm going to be in the money and I'm going to be called out. I'll be back into cash with my 1%. That's what I'm looking for. How do you determine if a premium is too expensive? All right, Brendan, you're thinking incorrectly. Okay, because I'm selling premiums. I'm not buying them. Okay, when I sell them, people pay me money. Now, if I was buying them, then I would think they'd be too expensive. But at this moment in time, I'm only selling them. Okay? 39? You guys aren't liking and sharing and all that kind of crap. And it's Sunday night. What the hell's going on here? Julie, since dividend is coming up, will it consider going up? A strike price in Paramount? That's an interesting question. Right now, it's at 11.97. the 12 is paying 2%. The next strike price up is the 12.5. And that's paying over 1%. So why would I change? But it's a good question, though, Julie. All right. So next one on the list, AVGO. Really, AVGO. 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 That's a big fat no. Okay, who came up with AVGO? Not for me, Julie, as the divvy is only 5 cents. Okay, it's an interesting way of looking at it. Now, why am I saying no to AVGO? Number one, it's a $1,400 stock. $1,400, I'm expecting to get a hell of a lot more than 20 bucks. Okay, I'd be expecting to get 140 bucks. 140 bucks is 1%. 20 bucks, that's no. Yeah, Houdini, you're right. The stock is way too expensive. It's close to the high, too close for me. It's just a no all around. Okay, I don't know why you guys think I can afford 1,000 shares of a $1,400 stock. I really don't. Do I really look that rich? Seriously, 1,000 shares of a $1,400 stock, and it's not even coming close. That's not even 0.5%. What is that, like 1/10 of a percent? What the hell is that? I'm just kind of curious. All right, 1880. 1880 is what I'm collecting. Divide that by 1,410. .01? That's horrible. All right. What's next on our list? BMY, Bristol Myers. Hey, somebody want to take a look at Bristol Myers? Here we go. Doc. Yes, I do look rich. Thanks, Doc. I suppose it depends on how you look at it. I'm comfortable. I don't know if that makes any sense to you guys. Why isn't this thing charging? Oh, battery died on that phone. All right, so we're broadcasting on 4 stations. All right, so let's get back to it. Bristol Myers Squibb, 1428, the 1450s. Sorry, the 4150s going for 30 cents. That's not 1%. Sorry. So it's no to Bristol Myers Squibb. Oracle, ORCL. ORCL. $123.11, the 123s. Nope, that doesn't make it either. How did you learn about all this stuff? Oh, brother, it's a long time learning this. Okay, back in 07, 08, when the market went to crap, okay, I had to put my money somewhere, so I was putting it in the stock market. My daughter, she was 9 years old at the time, she wanted to do the same stuff. So I had to come up with a trading strategy that was safe, predictable, consistent, simple, safe, predictable, consistent, in no way she could lose. Okay? New York boutique. I don't have much money to start out with. How can I sell covered calls? Ooh, you know what you gotta do? Send me your phone number. I'll give you a buzz. We'll chat and I'll explain to you. It's really not that difficult. Try Dell. All right, Houdini. You want to try Dell? Oracle is a no. Okay, the numbers just don't work. Yeah. So anyway, to get back to what I was saying, I had to create a trading strategy for my 9-year-old daughter. It had to be simple, safe, predictable, consistent, and no way for her to lose. So in order to do that, rule number 1 is never buy something you do not want to hold long term. 2, never sell at a loss. 3, make sure there's 20 years or more of increased dividends. 4, weekly options. And 5, make sure the numbers work. In this instance, the numbers don't work. But somebody want to take a look at Dell, we'll put Dell on the list. We'll take a look at it in a little bit. Next on our list is Hormel. HRL. $35.68. Well, that's pretty simple, isn't it? 35.68. The 35.50s are going for 70. That's more than 1%. The 36s are going for 50. That's more than 1%. Even the 36s, the 36.50s are going for 35, which is close to 1%. So I like Hormel. You know what else I like about Hormel? Well, it's over 100 years old. That's number one. Number two, they've increased their dividends to the shareholders for more than 5 decades. It's more than 50 years. How can you go wrong with Hormel? The numbers are working. Let's check the charts in 1 second, but let's continue to go over this to find out exactly what it is that they're offering. Okay, so the 35.68, I'd go for the 35.50s. Okay, you take 18 cents off there, because then it'll be 35.50. Okay, 35.50, 18 cents off the 78, 18 cents off of that, 52. Okay, so I'll be bringing in 52 cents. Where's my calculator? Clear that. 52 cents divided by the purchase price, 35.50, and that comes to a grand total of 1.46%. Okay, I like 1.46%. And I think I have Hormel written down, do I? Yes, I do. Written down and circled. Okay, let's look at the chart. First thing I want to see is where's the high of the year. The high of the year is right here in August, right around 41.80. She drops all the way down to the bottom of February, the middle of February, which looks like a 28.50. From there, she jumps up, keeps on continuing up, and then we have a little bit of a pullback. Let's take a close look at that pullback right there, because that's going to be very important. Alrighty. What is the max strike price out of the money you would go? All right, Houdini, I like to go at the money. Okay? What do I mean by at the money? All right. Right at this moment in time, the purchase price is $35.68. At the money would be $35.50, which is at the money, $35.50. That's where you get your highest rate of return. If you go to the 35, you're bringing in 95 cents, but then you got to take 68 cents off of that. It still works out to about the same, but I would prefer the 35.50 or the 35. Why? Well, because it's right now it's at 35.68. So as long as the stock stays above 35.50, right, this one right here, I'll be back into cash the following Monday, which is what I want to do. I just want to collect that 1% and then be back into cash. Buy it on Tuesday, because there's no trading tomorrow. Buy it on Tuesday, be out on Friday, and collect that 1% per week, every single week. Why wouldn't I do Hormel? They've been in business for over 100 years. They increase their dividends every single year for over 5 decades. There's no reason whatsoever, other than the fact I don't eat Hormel chili. I don't eat it. But no other reason why I wouldn't. Okay, Darbenley, NFL? Really? NFL. I've never heard of it. And usually when I never heard of anything, it's usually a no. Okay, so the question is, why don't you have Hormel in your portfolio? They're over 100 years old. You think that after 100 years they would know what they're doing. And they're offering me over 1% to buy it, turn around and resell it for basically the exact same. If I'm buying it for $35.68, I'm selling it for $35 and collecting 70 cents. I'm selling it for less than I paid for it, but yet I'm still making a 1% profit. I'm not seeing why that's an issue. The company's over 100 years old. They're not going anywhere. Okay, you never hear any bad news about Hormel. Simon Squibb, he was so shocked. I have no idea what that means. People post the weirdest stuff. You got it, Houdini? Okay. Only negative is their divs is T until 7:15. My secretary, I have no idea what you're talking about. Do you have a YouTube? If not, you should definitely make one. I got 2 of them. Or do I have 3 of them? I forget. Doc, when is the EX date for Hormel? HRL. HRL. Not in June, not in May. April. Wow, we got a long way to go. Do you know why? Because that's week number 2 of the quarter. Okay, this right here is April, week number 1 of the quarter. Week number 2, week number 3, week number 4, so on and forth. There's 13 weeks in a quarter. Okay, so week number 2, we have a long way to go because I think we're in week. What the hell week are we in? 4, that's 5. 5, 6, 7, 8, 9. We're in week number 9. Okay, this is week number 9 right here. Okay, Hormel is in week number 2, so we're not going to see week number 2 again. 13, 4, 5 more weeks for Hormel. Vanguard and BlackRock can't go wrong. All right. The price goes down past the premium. Do you sell before the week is over? Houdini, no. I buy it and I just leave it alone. I let the option expire or be exercised. Okay, so I'm on live every morning. Okay, we have a small group that's live every single morning. Monday, Tuesday, Wednesday, Thursday. Okay, from 9 a.m. to around 10:15 after we're all done trading, after asking all the questions that you need to ask in order to do the trading. Friday, we're on at 3. Why at 3? Well, because we want to find out how the stocks ended up for the week. Remember, we're only doing this weekly. We're buying it on Monday or Tuesday, and we like to be out by Friday. Okay? Monday or Tuesday, we like to be out by Friday. And then we figure out what are we going to do the following Monday. And then we do the same thing week after week. I've been doing this for over 20 years, the same damn freaking thing, over and over and over again. So for me, it's just, another day. What is your thoughts on Barrick? I have no idea who Barrick is. Could you please explain rolling options? Julie. Rolling options. Okay. Let's go down to here. Okay. Now, Miss Julie, I just so happen to have an open position in MPW. Okay, MPW. All right. Now, the current position that I have is for 31st of May, which is this coming Friday. All right. If I wanted to roll that position forward, I have options to do that. Okay. The bottom one is the current week, which is 31 May 24, this coming Friday. The next one, I can choose whatever week I want to roll it forward to. I can roll it forward 2 weeks, okay, the 7th of June. I can roll it 3 weeks, the 14th of June, the 21st of June, the 28th of June, the 5th of July, the 19th of July, so on and so on and so on. I can roll it forward for as far as I want, avoiding being long, being sold. Okay? Now, what can I collect? Well, at this moment, I have to buy back the current one that I sold, which is for the 31st, which is this Friday. The next thing I want to sell is whichever one I choose. If I want to go 1 week out, it's only going to give me a 10-cent credit per share. Okay? If I go, let's say I go up to July 19th. Okay? Well, now I'm getting a 30-cent credit per share. But that's like 5 weeks out. Is that really worth it for me if I'm getting a certain... It all comes down to the numbers. Okay, so basically, you're buying the one you just sold, you're buying it back, and then you're selling another one further out. That's all you're doing when you're rolling forward. But it does allow you to save your shares and not having to sell them. I'll delete that because I don't want to do that. But I hope that makes sense. All right, Darren Bentley. You have to buy back the original premium prorated. Correct. Well, it's prorated because it always goes up and down anyway. Yes, I know 30 cents on a $5 stock is pretty good. Yeah, but if I'm averaging 1 or 2% per week, why would I want to go out 5 weeks? It did. Thank you for explaining. Could we have a portfolio breakdown? I have 6 different accounts. Which one do you want to take a look at? I only share 2 of them publicly. Okay? All right, so let's get back to where we were. And my what do you call it, my portfolio breakdown? That would be right here, the 10-minute trader. Right? 10-minute trader gives you all my positions. Week 15, account 1, account 2. Look at that, 1.2%, 4.4. Week 16, 1.19, 1.65%. They're all there. I don't hide anything. Is Intel good? Intel is very good. Okay, let's take a look at Intel. All right, I'm going to put Intel on the list. INTC. Verizon is next. Verizon. Okay, we're going to ask you guys, AMD is better? Why would you think AMD is better? I think AMD is a no, isn't it? AMD. All right, Houdini, you think AMD is better? AMD has no dividends. Okay? No dividends. So the question would be, if they have no dividends and the stock goes down, what do you get? Speaking of technology, yes, AMD. Okay, Hassan Pfeffer for you too. If and when the stock goes down, because that's all stocks do, they go up and they go down. Okay. AMD. Okay, 167.28, the 167.50 is going for 259. Okay, fine, the numbers look good. Look at the chart. It went down, it went up, it went down, it went up, down, up, down, up, down, up, down, up, down. Okay, explain to me. I'm not into AMD. Speaking of technology, yes, AMD. Yeah, okay, so you're not into it. Yeah, I get that. I understand that. Okay, fine, dandy. But when the stock goes down, it's not if, it's when. That's all they do. They go up, they go down. 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 That's all they do. They go up and they go down. So when the stock is heading down, what are you collecting? They're not sharing their profits, so you're collecting absolutely nothing. That's the reason why I want 20 years of increased dividends. Because when the stock goes down, it's not if, it's when. It's never if. I haven't seen a single stock ever that went up and never came down. There's always profit taking somewhere along the line. Okay? Up, down, 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 up, down. That's all they freaking do. Up, down. That's it. When they come down, if they don't pay you dividends, what are you collecting? Nothing. That's why I don't like AMD. I don't like any stock that doesn't pay me a dividend. Because I'm retired. I rely on, who are we saying hi to this time? Lynn Romano. How are you doing there, Lynn? Hope you're there. Okay, I still don't know why it's on with this freaking phone. I have to get me some new phones. Either that, I gotta learn how to use the damn software. You would figure. Learn how to use the software. FHN. Really? Al, you want to throw that at me? FHN? FHN. Come on, Al. Al, you know better. Look at this. This is a monthly. Okay, Al, you've been here long enough. I just might have to start ignoring you just for a little bit. Al, it's a monthly. You know I don't do monthlies. The numbers just don't work. 1587, the 15s are going for 80 cents. Okay, that's negative numbers, dude. 1587, the 16 is going for 20 cents. Okay, 20 cents on a $16 stock. Okay, yeah, it's over 1%. Fine. But I got to hold it for 26 days. That's 4 weeks. If I'm getting a little over 1%, okay, the 15s, 80 cents. I'm losing 87 cents. So the 15s is out of the question. Uh-oh. All right, so the 15s are out of the question because I'm not getting 80 cents, but I'm losing 87. So let's go up to the 16. The 16 is paying 20 cents. Okay, granted, it's over 1%. Okay, but I've got to hold it for 4 weeks. 1% for over 4 weeks, that comes to 1/4% a week. 0.25. 0.25. Yeah, never mind, hell. Yeah, you already put your foot in your mouth, buddy. Not sure how it made it onto my list. I don't know how it made it on your list either. But anyway, here's what it is. Let's go to the next one on the list. Next one on the list, GPS, the Gap. The Gap had some good numbers this week. DPS 21.22. So the 21s are going for $1.48. Are you shitting me? Really? $1.48? That's freaking nice. Wow. All right, let's take a look at the number. Let's take a look at the chart. The numbers are just unfreaking real. Is GPS on my list? Yes, it is. It is written down and it is circled. All right, so a year ago today, check it out. The bottom of the year, a year ago today, that was right around $8. Up, down, up, down, up, down, blah, 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 blah. High of the year. Okay, high of the year is right here in March. The low of the year is last June. Last June was the low. March was the high. Right now we're sitting at $20.98. That's close to 21. All right, so where are we? 21.22 is paying $1.48. The 21.50 is paying $1.25. Even the 22s are paying 96 cents. They're all freaking outrageous. Okay, well, let's take a look at the chart. The last 90 days, right there. 90 days ago, we had a bottom at 1850. She shoots on up, gets our high of the year at 2850. Drops back down to the 1970 area. Up, down, up. Here we go. Take a look at the last 30 days. The last 30 days. Here we go. Last 30 days. You see this? The last 30 days? We over here. Up, down. We have our 30-day bottom right there at 1975. Shoots on up to 2375. Comes all the way down. Wednesday was the new bottom. 2 days to the upside. Thursday, Friday. It's almost guaranteed to jump in on Monday. Well, I am. Oh, because I seen what the numbers look like. It's freaking ridiculous. If I jump in at 21.22 and I sell someone the right to buy it from me at 21, I'm collecting $1.26. So clear this, $1.26. I'm going to divide it by the purchase price, 21. That gives me a grand total of 6%. 6% for 1 week. The stock has to stay above 21. Right now it's at 21.22. So if I'm buying it at 21.22, selling off the 21s at $1.48, okay, I'm still profiting $1.26 per share, which is over 6%. So how could it not be on my list? Okay, everybody's heard of the Gap. I'm on YouTube. Okay, is this Foot Locker? Nope. Who makes up the premium price? Mama, that's usually the market maker. Okay? And they have they use what's called the Black-Scholes pricing method for options. It's freaking confusing as hell. They take into consideration all the Greeks. If I started getting into that, it could get really confusing. So I prefer not. Okay, remember the 5 rules? And the 5 criteria? It had to be simple. It has to be safe, predictable, consistent, and no way to lose. That's the 5 criteria. So, never buy something you do not want or do not want to own or do not understand. Okay? Don't buy it unless you understand what it is. GPS, it's the Gap. You ever heard that term? Fall into the Gap. I remember that commercial from back in the 80s or the 90s. Let's go, Jason Olivetti. That sounds like a Olivetti. That does sound like a mafia crime boss name, Olivetti. Wow, maybe I shouldn't say that. All right, anyway, the Gap. It's on my list. You have 2 days to the upside. Here's your new bottom right here, 2050. 2 days to the upside, 20.98. So if I'm buying it at 21.22, selling the 21s, I'm picking up $1.48. $1.48 is 6%. 6% for 1 week. That's crazy. AEO, huh, Secretariat? I'm going to write it down because you know we already have AEO. Okay, LAND. Who came up with LAND? Might put in LAND. LAND. Gladstone Land Corporation REIT. Really? That's a no. Come on. CELH? Really? CELH? Just a little mob blood. You want to hear something crazy? I'm related to Whitey Bulger in a weird kind of a way. Yeah, for those of you guys who know who Whitey Bulger is. LUV, Humbo? LUV. Okay, so CELH. CELH. Celsius? Really? I've never heard of Celsius. CELH. Why have I never heard of this company? CELH. That's why I never heard of the company. Okay? Yeah, LUV, Southwest Airlines. We'll take a look at that. Does this work similar for stocks we leave long term? Samuel's family, how you doing? You're new here. Does this work similar for stocks we leave long term? I have no idea what that means. Okay, but the reason why I've never heard of this company, CELH, keep long term. Ooh, I'm going to get to that in a second. The reason I've never heard of it, they don't have dividends. Okay, no dividends in this selected time period. That's Yahoo Finance. Retirement stocks. You could say, that is one way of looking at it, Samuel. Is it okay if I call you Samuel? Okay, Samuel's family. Retirement stocks. Okay, see, I'm retired. This strategy I came up with 15, 18 years ago for my daughter. Because it had to be simple, it had to be safe, it had to be predictable, consistent, in no way she could lose. So, never buy something we don't want to own long term. Never sell at a loss. Make sure there's 20 years of increased dividends, weekly options, and make sure the numbers work. L, can you sell out of the money calls? Yes, you can. But if it jumps, you could miss the big increases. Yes, that's true too. DHIL, please. Time for me. DHIL. I've never heard of that. DHIL. Diamond Hill. Come on, now Hasselhoff, you've been here long enough. If it doesn't have options, it's not on the list. 20 years of increased dividends, weekly options. That's the only criteria I ask of you guys. 20 years of increased dividends, weekly options. You said if the numbers work. Yeah, there's no numbers to work. How could the numbers work if there are no numbers there to work? Do you know what I mean, Houdini? Okay, if there are no numbers, how can they work? Okay, and if they don't have dividends, first of all, they have to have dividends. Okay, 20 years of increased dividends. That's it. 20 years of increased dividends and weekly options. That's the only two criteria. Only two I'm asking. Brett, do you have to always buy in on the first day of the week on weekly covered calls? Brett, you don't have to do anything. I'm just telling you what I do. I buy on Monday. The reason why I buy on Monday, is this valuation right here. Okay, the bid and the ask. The bid is what you could sell it for. The ask is what you have to buy it for. Okay, so if I am collecting this, which is the bids, what I collect as a seller, because I am a seller. When I sell a covered call, I'm collecting a premium. I'm collecting this one right here. So Monday is the highest time value because you have let's pull up this right here for a second. Monday is the highest time value. As the days pass to Friday, you lose value in the time. Because on Monday morning, you have 5 days. On Tuesday morning, you have 4 days. Wednesday morning, 3 days. Thursday morning, 2 days. Friday morning, 1 day. You're basically selling time. That's what a covered call is. If I buy it for $100 and I sell it for $100, I'm collecting a 1 cent premium, but that 1 cent premium is from Monday. Tuesday, it's not going to be 1%. Wednesday, and Thursday, definitely not going to be 1%. That's why I always do it on Monday. Do you have to always? Okay, nope. ARBK. Let's see it. Jason, you're new here. You sure you want to do that? Because I'm going to pick on you if ARBK is incorrect. And I can tell you right now, it's more than likely going to be incorrect because I've been doing this long enough to know that ARBK, I've never heard of it for number one. ARBK. All right. This is where I get to pick on you, Jason. You ready? ARBK, number one, I can almost guarantee $1.37. They're not going to have 20 years worth of increased dividends. Seriously? How can you get 20 years of increased dividends on a $1.37 stock? Doesn't make sense. Number two, it's a monthly. The numbers just don't work on monthlies, which means I can only do it 12 times a year. If I can only do a covered call 12 times a year and I can gain 1% 12 times, that's only 12% return. Why the hell would I do that when there's so many other companies offering me 1% per week? Please pick on me. And it's incorrect. Yep, it is incorrect. Sorry, dude. but seriously, it's really not that difficult. There's 9,516 companies. Why do I know that? Okay, let's quickly take a look. Why do I know that? FIN, the FinViz. All right, so right now we're going to go take a look at a website that I like. It's called FinViz. All right, financial visualizations allows you to take a look at a lot of interesting, really cool shit. I can't get rid of that damn ad. It has a lot of ads. So anytime you get free stuff online, you're going to get a lot of ads. Okay. All right, so anyway, who has the highest weekly dividend stock? Samuel, you have to hang out. You have to hang out and chill for a little bit. CC, we'll put CC on the list. CC is on the list. That's like the third time you asked me for that, so I'll write it down. Usually CC's a no, but I'll let you see it yourself. Okay, so FinViz, financial visualizations. What am I looking for right here? This is what I'm looking for right here. I don't even have to look. I know exactly where it is. Right there. Oh, we went up. 9,517 companies. Right there. See the number over here in the corner? Okay, now for you guys who can't see these little tiny numbers here, this screen behind me is live on YouTube. I got you on YouTube for a better view. Yeah. Okay. So you can actually see the numbers here on YouTube. Okay. The screen behind me is live on YouTube, so you can actually see the numbers. See over here in the corner, 9,517 total. That's how many companies are available in the stock market to trade. That's a lot. How the hell do you decipher which one's right, which one's wrong? Well, here we go. Now, you get two choices. A company's going to share their profits, or a company's going to take the profits, put it back into the company, and increase the dividends. Jason, we did AMD. AMD does not pay dividends. Can we argue AMD, please? Yeah, I just did. Okay? AMD does not pay dividends. AMD is a no. It has to. Well, all right. If you wish and pray as much as you like, buddy. If you want it to pay dividends and it doesn't, I can't help you out with that. Okay? But AMD is a no. We looked at it like 20 minutes ago. Okay? People ask me to look at AMD and ADM all the time. And both of them are no. Okay, let's get back to what we're talking about. 9,517 different companies. Okay, 2 different companies. 2, that's it. That's it. Just 2. One's going to share the dividends through what's called a dividend. Sorry. One company is going to share their profits. So when a company is profitable, it's going to share them with the investors through what is called a dividend. That is your share of the profits. The other side, they take all those profits invested back into the company for capital growth. I don't do capital growth. I'm at that point in my life where I want safe, predictable income. I'm retired. I don't want to have to put, $5,000, $10,000 into this company, wait 20 years for it to see something. Fuck no. That's not what I'm here for. Safe, predictable, consistent income. That's what I want. Safe, predictable, consistent income. And I found a way to give me 1% per week. And it's the stocks you all heard of. Very rarely will you find a stock that I invest in personally that you never heard of. You're awesome. Thanks for doing this. Everything is starting to make sense. Well, it's going to make a lot more sense in a couple seconds. Hold on. 9,517 different companies. I'm going to go right here. Dividend. Okay, as soon as I click on this, let's say we do a positive dividend. Just positive. Okay? Just a positive dividend. 0.5%, 1/4%, 1/8%, nothing huge. But just positive dividend. We're at 5,939. Sorry, 5,393. But I don't want just positive. I want companies to have a good premium. They have a good dividend. All right, so let's bump that up a little bit. Let's go to 3% yield. Okay, 3% yield. That's not bad. All right, 3%. Now we're down to 2,513 companies. That's still a lot of companies to go through. Let's take a look at one more thing. Remember I told you I want options? I'm going to click on this one right here. I want options. Now, one thing I don't like about this, it doesn't distinguish between weekly and monthly options. I only like weeklies because I can do it 52 times. And if I can get 1% a week, that's over 50% per year. But if it's a monthly, I can get 1%. That's only 25% per year, not 24% per year. Yeah, no thanks. KLAC and AMD criteria met. Really? What site is this? This right here is called FinViz. Okay, so once I change that, okay, options and a halfway decent dividend, now I'm at 1,434 companies. However, if you look for 20 years of consecutively increased dividends, okay, you're looking at the dividend kings, the dividend aristocrats, the dividend champions, the dividend contenders, okay, all of those companies, 10 years to 50 years of increased dividends. Okay, so somebody wanted to challenge me on something. I forget what it was. Jesse, how you doing over here, Jesse? All right. KLAC and AMD. Well, we already talked about AMD is a no. Okay, AMD is a no. Okay, I don't know why people keep doing that. AMD. Okay. Now, Haas and Pfeffer, you've been here long enough. You should know better. AMD. Advanced Micro Devices. There are no dividends for this selected time period. No dividends. AMD is a no. Sorry, AMD is a no. So, CLACS. So you want to look at CLACS. KLAC. Is that right? KLAC? KLAC. All right, KLA Corporation. Ooh, look at this. Nice. 05. Okay, they started paying the dividend in 05, 12 cents. Okay, they don't increase every year. 12 cents, 12 cents, 12 cents in 05. 06 is still 12 cents. 07 still 12 cents. 08, they went up to 15. 09, 15. 10, 15, 25, 35, 40. Okay. 45, 50. Now, what is this? It's got to be what's called a special dividend, 1650. 50, 52, 54, 59, 75, 85, $90, 30. Okay. Alrighty then. So CLACS has 20 years of dividends. All right. So let's go here. ALAC. Okay. It has weekly options. It's got 20 years worth of dividends. But what is it missing? It's $780 a share. I don't do anything over 350. I don't do anything over 300. Okay? But if we were going to do that, 780, the 780 is going for $9.70. All right, clear. $9.70 divided by $780. 1.2%. Is that right? That can't be right. Yeah. Okay. So it's 1.2%. I stand corrected. Constant Pepper, you're right. However, it's out of my price range. I can't do $780 a share. I don't go over 250. Sorry. But yeah, you're right. It does work. But that's a long way down. I want to check one more thing, just for the fun of it. I want to check what the book value on this thing is. Just stay with me for a little bit. Estimate low, blah, 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 blah. That ain't it either. Statistics. Oh, it'd be under financials, wouldn't it? Gross profit. Okay. Cost of profit. Earnings per share. That's horrible. $20 per share. I'm missing something. Analysis. I already thought I did analysis, didn't I? That's not it. What am I missing? Statistics. Price book 33. Ah, here we go. I found the flaw with CLACS. Everybody find the flaw with CLACS there, Constant Pepper? Okay. Yeah, they make the 1%. Yeah, they have weekly options. Yeah, they have 20 years of increased dividends. Look at the book value. The book value is, I'm in the way, right there. $22.97. This is an $800 stock. It's only worth $22.97. It's only worth 23 bucks. So why are you paying almost $800 for it? Okay, now, Ford has a stock price lower than its book value. Bank of America, stock price lower than its book value. General Motors, stock price lower than its book value. This one, the book value is 23 bucks, but the stock is $780? How can you say that? Well, Chad, this site right here is Yahoo Finance. Okay, yeah, so when I pick my stocks on my list, I do check out the book value. Absolute worst case scenario, if this stock goes down, it's got a long way to go before you can break even. Because you're going to break even. If they liquidate this, okay, if they liquidate this, $780 a share, you're only getting 23 bucks. That's all it is. It's 23 bucks. Let's take a quick look at okay, here's Ford. Right now the stock price is 12 bucks. All right, so the book value is $10. Okay, last year was like 14. Right now it's 12. It's $10. General Motors. $60 a share for General Motors. That's the book value. If they liquidate, that's what it's worth. What's the stock price right now? $44. The stock price is $44. The book value is $60. So if you bought this stock at $44, right? The bankruptcy court comes in and said, well, we're going to liquidate, pay off all your investors. Well, your investors are going to get $60 a share because that's what it's worth. Those are one of the numbers that I like to look at before I put anything on my list. So CLAC, C-L-A-C, that would never make my list. Even though the numbers work and the charts work, the numbers don't really work because if the company goes belly up, I'm getting $20 a share on a $780 stock. Yeah, no thanks. But that's just my opinion. What the hell do I know? I suggest you guys do all your own research. I don't know shit. Altria, huh, Jason? I like Altria. How do you check book value? Makes sense. I'm glad it makes sense. That's the pepper. What was that question? How do you find the book value? Well, this right here is Yahoo Finance. You can get it under any finance website. You know, Google Finance, Yahoo Finance, NYSE, New York Stock Exchange. You can get it from there. The CBOE, you should be able to get it from there. But you can go to Google and do a search. And what's the book value of X company? All right? All right, so let's take a look at the next one on our list. The next one on our list will be Kohl's, KSS. I like Kohl's. I made a lot of money with Kohl's. How can you options on FinViz? I don't scan option on Viz. I only use FinViz to show me and to show you guys how many stocks. I used to use FinViz years ago until I found some interesting things. Okay, I like weekly options. FinViz doesn't give you the distinction between a weekly option and a monthly option. Okay, the information it gives you is extremely limited, right? Unless you pay more money. Okay, and I don't scan options on FinViz. All right, so we are looking at Kohl's, KSS. Now, if you remember correctly, let's go back to here. How many times did I buy Kohl's this year? Nope. 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 No. Nope. I know I bought Kohl's this year. Yeah, Kohl's. Week number 11. Okay, so that's the first quarter, week 11, Kohl's. Week 13, week 12. Week 13. Yeah, so I bought Kohl's already this year. Okay, I already bought Kohl's. What? Integrity 3D Printing, you're back. I seen you before. I did. Integrity 3D Printing, I'm good with names. Okay, so Kohl's, let's take a look at it. 2668. The closest one's going to be the 27 or the 2650s. Didn't we already look at this one? We did. Yeah, because losing 18, 146 means I'm going to make one. All right. Let me check out the math. Okay? The numbers are close to something else I looked at. Been busy. Nothing wrong with being busy. Everyone's busy. Yummy. Go put those in the freezer. Oh, can I have one, please? I got you a treat.
I gave one to Nyla.
Nyla loves popsicles. Thanks. I love popsicles, especially in summertime. Okay, so Kohl's, I can get it $26.68. If I sell the 2650s, I'm losing 18 cents. 18 cents off of this is 38, is 128, is that correct? Yeah, making $1.28. Clear this, $1.28. And divide it by the purchase price, 26.50. It gives me a grand total. That can't be right. 4.5%. Is that right? These Kohl's on my list. That. Yeah, Kohl's is on the list. Yeah, we wrote that down the other day. All right. So take a look at the numbers. $26.68, what I can pay for it. I can sell it basically the same price I paid for it, or at the 27. The 27 is still plenty. TMO. Too many options? All right. Yeah, that's going to be a no. Sorry, dude. TMO, Charlie. I don't do stocks over $250. Okay, and it might work for you, but I don't have that kind of money. You got yourself a doppelganger. Doppeldecker? Double? I have no idea what that is. Sorry, Charlie. So let's look at the chart. We got what do you want to call that? Like a quadruple high? Look at it. Once, twice, 3 times. Actually hit it like 3 times here. So once here, 3 times here, and twice here. Okay, if it was going to be worth $30, it would have hit it sometime during the year. But it's 5 times it tried to hit $30. Look, we're over here in August, 3 times in December, and twice here in March, and it just doesn't go any higher. All right, well, let's look at the bottom. We got double bottom here in October. So we know what the bottom is, and we know what the high is. Okay, so where is it right now? Well, let's take a look. Right, last 90 days. All right, she goes down, up, down, up, down, up, down, up. Okay, so last 30 days. Okay, it's the last 30 days. Same thing. 1, 2, 3. 3 bottoms right there. Okay, 30 days ago, 3 weeks ago, 2 weeks ago. Okay, from that bottom right there, she shoots up. Here's your 30-day high. You really can't mistake that. Your 30-day bottom is here 3 times. Your 30-day high is here. It pulls back, goes up, pulls back, goes up again. 2 days to the upside, perfect opportunity to jump in. Your high is right here, plenty of space between here, and it's still an upward trend. There you go. Thanks. All right, so let's continue. Well, one thing we haven't looked at yet is what does Kohl's normally do this time of year? For that, we want to look at seasonality. Now, for those of you that are new here, seasonality, the blue line represents the movement for this year. This is what it has done so far this year. Now, the red line up here represents 10 years worth of data. What has it done in the last 10 years? Well, she was up a little bit, pulls back, and here's bottom right here, which we just left a little while ago. But look here, she's going to peak up. So let's zoom in close and take a quick look at that. Okay, so here's where we are right now, where that blue dot is. There's 1 week, there's 2 weeks, there's 3 weeks. Okay, so for the next 3 weeks, look. Basically sideways, a slight build to the upside. Is this Kohl's? Yes, it is. So I like Kohl's. I do. And Kohl's is on my list. I'm just a little unhappy I don't have enough money to buy everything that's on my list. Remember, I'm only picking up two stocks this week. What stock is better to buy today? You can't buy anything today. Today's Sunday. You can't buy anything tomorrow. You gotta wait till Tuesday. Which means I can't even read that name. Which stock is better to buy today? I can't even read that name. That doesn't make sense. I sent you a message instead of doing it here during your live. Ask you how to join. Troy, good question. It's easy to join. Okay, go to the website, .10minutetrader.com. All right, once you get to the .10minutetrader.com, you get to this right here. Investing in dividend stocks up to 50% annual return. Simple, safe, consistent, predictable. Does that sound familiar? If you're looking to strike it rich overnight, this ain't it. It says it right here. If you're looking to strike it rich overnight, this ain't it. My main focus is safe, consistent, predictable, 1% per week. It says it right there. Lackey. Hey, that's your name, Lackey? That's weird. All right, so slide down a little bit. One video telling you exactly what I do. Video explaining to you the no risk. There you go, right there. Join here, join live. Uh-oh. My popsicle dripped. All right, so let's go back to where we were. Yeah, so I like Kohl's. Next one on the list. What's that website, please? If you go up here to my bio, .10minutetrade.com. Thanks, 86. All right, so next one on the list. Who's the dude who wanted to look at JEPI? I remember someone, and if you don't speak up, I'm not going to even bother. You got it, Charlie? You guys aren't guests. It's kind of warm here. My popsicle's almost melted. Right. Who wanted to look at JEPI? JEPI. Right, it's not here. I'm not going to bother looking at it then. We're going to skip JEPI and go right to British Petroleum. If you're going to suggest a stock, and I'm not going to be here around for it, I'm going to do Pickled Peanuts. You're back again. Hey, how you doing? You haven't seen you in a while. Nice of you to show up again. All right, so we're going to look at BP because the gentleman who wanted to look at JEPI disappeared. All right, so British Petroleum, 36.91 to 37s, 21 cents. Not quite 1%. Now, I have way too many stocks paying me 1%. I think we have how many so far? 10. I'm only picking up 2. So far, we found 10 to take a look at. All right. So BP is going to be a no. Somebody wanted to look at ConocoPhillips, COP. 117, the 118s. Again, no. I wanted 3 days. I waited 3 days with VLO. All right. Hey, we looked at VLO last night. We did. We looked at VLO last night. You weren't here. VLO. 162.93, the 162.50s. Barely making the 1%. Are they? I'm losing 44 cents. 44. Yeah, it's not even 1%, dude. The 162.94. Okay, 162.94. The closest one is going to be the 162.50. Okay, losing 44 cents right off the top. You take 44 cents off of 164, you're down to 120 on a $160 stock. It's not even 1%, dude. Sorry. Sorry, 86. It's not even 1%. I must have missed it. Sorry. Thoughts on Maine? Yeah, Paul. No. Maine's a no. Maine. M-A-I-N. Maine's a monthly. What does that mean? That means I can write a covered call 12 times. If I collect 1%, 12 times, that's 12%. Why the hell would I want to do that? Sorry, Troy. Do you place those a certain time Monday mornings or Tuesday mornings this week? Or is it random? Oh, it's first thing in the morning. First at 9:30. 9:30, as the market is opening up, there's a whole bunch of us. We do what's called a Zoom call. And you actually see my account. Okay, so you have everyone who on the Zoom call gets to see my account, gets to see me trade it. Then you get to ask all your questions. I work nights, so I can't stay up the whole trading day. Troy, the whole trading day, it's only like 15 to 20 minutes. That's it. So if you could do 15 to 20 minutes to make 50% per year, that's only a question you can answer. Sorry. Julie, do you buy right away at 9:30, or do you see how it turns out first? Most of the time, Julie, it's right away. Okay, it's like I will put my trades in before the market opens. Cool beans. All right, so let's continue where we were. So Maine's a no. Maine's always been a no. Can anyone join? Yep, Charlie, anyone can join. I showed you right here. It's $100 a month, Charlie. I'm not going to kid you. Okay, go to the 10minutetrader.com. This is the link right here. Click on that link, and that'll take you to the Patreon page. I'm not delusional. I'm not. Seriously. You're going to join $100 a month. You have 30, well, there's only 22 trading days. There's only 22 trading days a month. So you get to look over my shoulder for 22 trading days. Ask me any questions you like from any stocks you like for $100. It's kind of like a no-brainer. It's not that I need the money. I don't need the money. It's just that I want you guys, whoever wants to join, to have some kind of skin in the game. Okay? Those who pay attention. Those who pay more attention. It's not the money at all. I could care less about the money. Seriously. I'm doing it anyway. One more person on, not a big deal. Where was I going? And I'm also not delusional. My assumption is you're going to be on for maybe a month, maybe 2 months, maybe 3 months. And then by that time, you should be able to figure it out on your own. It's really not that difficult. It's the same stocks over and over and over again. It's not, there's nothing magical about it. It's the same stocks over and over and over. It's the 10-minute, it's right up here in the bio. Okay? If you want to search me out and find my information on me, I've been around for over 20 years, dude. It's really not that difficult to find information about me. The 10-minute trader, okay, dividend stock talk. You look in Google. Dividend stock talk, the 10-minute trader, you'll find a whole bunch of information on me. Seriously, I got information going back, oh my goodness, back to the 90s. I've been actually on, I still have the same website. Same website since the 90s. That's freaking crazy. Do you publish the stock list to your members every morning? Every Monday, you get the list of the stocks for the week. That's it. I'm not giving you all at once. Yeah, you want to join in, you get to look once a week. There's only 13 weeks in a quarter. So what is that? 3 months? All right, so anyway, where were we? Maine's a no. OHI. Who's the one who wanted to look at OHI? OHI? Really? OHI. Omega Healthcare Investments REIT. Now, usually when I say it's a no, it's usually a no. Okay? OHI. Whoever asked it, I asked, you seriously want me to look at it? It's going to be a no. It is. It's a monthly. I don't like monthlies because there's only 12 months in the year, which means if I do a covered call, I'm only collecting 12 to 18% per year if I'm lucky. Why would I do that when I have so many other companies doing weeklies? Thanks for answering all the questions and being very upfront. I like everything I've heard. Well, Troy, the most important thing, all right, if you take anything away from this encounter, one thing, does it make sense? That's it. That's what I'm trying to get through to people. Does it make sense? If you continue listening to the people that got you to where you are today, you continue to get what you got. Okay? This is a new way of looking at things. This is the new way of saying, all right, I don't want to invest for annual returns anymore. I want to invest for weekly returns because that's what I'm looking for. Weekly returns. Why? Well, because I'm not promised a year. I'm not even promised tomorrow. Okay? I want to take my money, put it someplace, and have some kind of idea where I'm going to be in 5 days. What's the website for membership?
I think Patreon. Yeah.
So go to the10minutetrader.com. Hey, you can just look under my name. Go up there to the bio, see who I am, what my name is, my website, all that shit. You could. I'm really not that difficult to find. I've been online so freaking long.
Okay, the10minutetrader.com. You slide on down. Okay, here's the live trading here. You go down just a little bit lower. You can download the 3-step guide,
Basically telling you how to do it. You don't really need me.
3-step guide how to do it. Here's my social media. YouTube, Twitter, Facebook, Instagram, podcast, LinkedIn, Patreon, TikTok, and yes,
Books by James. James has written 13 books. Book number 13 will be ready, I'm hoping, this week and next week and the week after. Pretty soon, though.
Okay, so if you click on this,
It's going to take you to Patreon.
Dividend Stock Talk.
And that's where you join.
I got to change the battery out. My fan died.
I have a fan blowing on my cameras to keep them cool. Alrighty. Alright. Is Verizon a good one? Verizon's on the list. Actually, we already looked at Verizon.
Okay, so AHI is a no. Verizon, which is VZ. 39.72. The 40s.
15 cents. Dude, that's not even 0.5%. Okay? But don't get me wrong. If you like 0.5% per week, that's still over 25% per year. I mean, think about it.
Find a company you like. If you really like Verizon, look what you can do. 49.72. Sell off the 40s. Get 15 cents.
If it never hits 40, you still collect that money. And then you do it again next week, the next week, and the next week. You can collect 4 dividends, okay, if you hold all year, and 52 premiums a year. Why would you just settle for the dividends? Okay, because the stock,
Look what it does. It goes up, it goes down.
up, down, up, down, up, down, up, down, up, down, up, down, up, down. That's all they freaking do. They don't do anything else but going up and down.
Best time to buy them is from the high. As soon as you find a new bottom, let's take a look at the 30 days.
Because you can't do anything about 6 months ago or 5 months ago. It's just this 30 days. And what's coming up next?
Well, it's pretty easy to figure it out. Look at this, 30 days ago.
We have the high and the low the very same day. My guess, it makes no sense to get into a membership unless you have options trading privies. Well, you do have. We do trade options. We buy the stock, we sell the option, and we make 1% a week. That's the goal, 1% per week. If 1% per week, which is over 50% a year, is not enough for you, I really can't help you out. It's the only one I teach here, and I teach this one for free. But if you want to look over my shoulder and ask me questions as I am trading, as you are trading, because my assumption is most of the people that are live with me on Monday mornings, Tuesday mornings, we do it every morning, Monday, Tuesday, Wednesday, Thursday, and Friday, okay? Most of the people that are watching me trade also have their own accounts up, and they're trading as I am trading. If you're doing the exact same trades as me, that's your thing, okay? I don't tell people what to do. I just show you what I'm doing, and then I answer questions. That's what you're paying for. You're paying for me to answer the questions you have on what it is you're looking at and you're thinking about. And I'll give you my honest opinion. Okay, right now, Verizon, $39.72, the 40s is going for 15 cents. That's not 1%. That I would pass on. You can apply to trade options easily with your broker. Ah, yes, that's what he's saying. He doesn't have a problem. Well, when you talk to your broker, you say you want to do covered calls. It is the absolute easiest and simplest trading strategy there is. They have different tiers to apply for. This is the safest, covered calls. All right, Verizon, thank you, got it.
All right, Verizon's a big fat no. Next one on the list, Dell. Somebody wanted to take a look at Dell. Let's take a quick look at Dell. DELL. $161.90, the 162. Ooh,
Check that out. I like the numbers. I like the numbers, but you know what I don't like about Dell? Look at this. It's at the high of the year.
even though the numbers are really nice, I mean, really nice, the 161.90, the 162 is going for 780. That's freaking huge.
But here's the thing.
Yeah, 86, you're right. What the hell do you think's going to happen here? Look, it's at the high of the year.
How much higher do you think it's going to go? It could go higher.
It could.
But I think I said this last night. There's 266 trading days in a year. 266 trading days in a year. Your odds are 1 in 266. That's just going to make another high. Because there can only be one high.
It's not a 50-50 shot.
Well, it kind of is a 50-50. It's going to go up or it's going to go down. But there can only be one high. So it's 1 in 266. The odds are 1 in 266 that tomorrow is going to be Tuesday is going to be a higher day.
But I do like the premiums.
Wouldn't that be nice?
But yeah, you have to really, 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 really like it to buy it at the high of the year.
Because you don't make your money by buying at the high of the year. You make your money when you buy it, not when you sell it.
Because I would wait for it to come down and make a new 30-day bottom, which would probably be somewhere in the 130s or the 120s
Before I think about buying Dell.
only because it's out there.
NFL. Now, who wanted to look at NFL? Jolly, 0.033712. Yeah, that's horrible.
That's what your chances are.
It's actually a 50-50 shot. It's either go higher or it's going to go lower. But there can only be one high of the year, so it's 1 in 226.
It could be. You never know. Okay, somebody want to take a look at NFL. I've never heard of NFL. That usually means
Usually means it's a no. And it won't even pop up. Then that's a definite no.
sorry. Intel. Ooh, I like Intel. INPC. Now, let's take a quick gander at Intel. 3070. So I'm looking at the 31s. The 31's just barely 30 cents, which is just barely 1%. So this, if I was going to do it, which I'm probably not, because I got 10 different other companies that look better than this, okay? But if I was going to do this one, I would do what's called a, hold on a second,
A limit order. A limit order. Okay, I usually do market orders because I want to be, I just want to be done and over with. I want to get in, get my 1%, be done and over. I don't really quibble about pennies. I could do a limit order, then it's an iffy. It might not, because then it's up to the market maker. But a market order is instantaneous. Okay, if the market maker posts it, then he's required to fill it. If it's a market order, he's required to fill it instantaneously. That's one of the rules about becoming a market maker. Now, a limit order, if I say I want to buy it at this, but I want to get my 31 cents. 31 sell to open, 31 cent limit order. That means if it's at 29, if it's at 30, he won't sell it. He won't fill it. He can only fill it at 31, which is my 1%. I don't like limit orders because it's kind of restrictive. I don't quibble about pennies as long as I get my 1%. I probably could make more money if I did quibble about the pennies. But I'd rather hang out with my grandson and watch the grass grow. I mean, I've been doing this long enough, it's like, I don't want to stare at the computer anymore. I don't. I want to get in, do my hour, because it usually takes me personally, it takes me 10 to 15 minutes for my own personal account. But when I'm teaching everyone else, it's a little bit over an hour. I'm going to answer questions. Hey, I'm perfectly fine with that because I'm helping people. Okay, that's what I'm here for. I'm here to help you guys out. It's not, I'm not after the money. Trust me, I'm not. I make plenty just trading my own account. Okay? All right. John, welcome to the list. And Heaven Skies Image. Heaven Skies Image, thanks for joining. Okay, limit order works best if volume is low. Yeah, I just don't like limit orders. I do limit orders when I bring stocks over. Okay, so the 5 positions that I'm bringing over from last week, I will sell those with a limit order. But when I'm doing a covered call, that's buying the stock and selling the option at the same time, I'll do it as one trade, and I'll do it as a market order. That way it's quick and instantaneous. Ooh, Anadonic. Andonic? I don't know. How you doing over there? All right, so INTC. Yeah, I'm not too fond of the numbers, but let's take a look at the chart just for those who like Intel. The Intel had better numbers last week. All right, first thing I want to look at, right? Where's the high of the year? Where's the low? The low is a year ago, way over there. Okay? She was up, down, up, back down. I'm just going to do it quick. Okay, she went up and she came back down. Now we're sitting at 30.72. Let's take a look at the last 30 days. All right, so here we are with the last 30 days. 30 days ago, we're at 35.20. Okay, big drop. Okay, she goes from 35.20 down to 30. Lost $5 overnight. That sucks. Down, up, down, up, down. Okay, our 30-day bottom is right here, right around 20. What the heck is that? I'm going to read them to you. On the 8th, 29.73, 29.81, 29.84, 30. Okay. And then Thursday, 29.87. So, pretty much the 29.80 area is the bottom. Thursday is the bottom. Okay, it's time for a quadruple bottom. Yeah. Chips account, Intel. So Friday's an update. If Monday's an update, then it's a quick buy. Okay, that's just my humble opinion. I'm not telling you. I always suggest you guys do your own research, figure things out on your own. All right, so that being said, that's Intel. Next on the list, AEO. All righty, AEO 23.39. Look at the 23s. Ooh, nice. $1.22. The 23.50s, $1. Okay, so if we went for the 23s, I'm losing 39 off of that. Okay, see the 23, you're losing 39 cents right off the top. It brings you under $1. You're better off going with the 23.50 because it's giving you $1 and you're not losing anything. All right, so go for the 23s. That's, my friends, 4%. 4% for AEO, American Eagle Outfitters. I'm not quite sure if you all know who those are. When I first looked at them, I didn't know who they were. But they basically do the Harley-Davidson clothes and, the really cool shirts and shit. Yeah. Clothing company, I believe. All right, so let's take a look at the chart. The bottom of the year was a year ago. Okay, nice upward trend. Look at it. Continuous upward trend for the whole year. You can't disguise that from anything else. All right, let's look at that. It's 30 days because that's, all right, let's look at the last 90 days because that's more important. Okay, so here's the last 90 days. Okay, shoots on up, 26.50, drops all the way down to 22, back up again to 26, back down to 22, back up to 25, back down to 22.50, and 2 days to the upside from the previous bottom. I like it. The last 30 days. Here we go. Last 30 days. The high was about 30 days ago. Down, up, challenging that high again 2 weeks ago. Okay? Come down, a little bit up, down, makes a new bottom on Thursday. Okay, Thursday was a green day, Friday was a green day. What does that tell you? Okay?
Now, I already own some AEO, so perfect opportunity to dollar cost average down. Because where am I with my AEO? $25.97. Holy fucktards. $25.97 is way the hell up here. Yeah, that's a good opportunity to dollar cost average down. So from 26, 23, halfway in the middle is going to be 24. And the 24s are going for 79. Okay, so that's what I'm going to do. I'm going to dollar cost average down and then sell it smack dab in the middle. Because at 26, $25.95 is where I'm at. And the current price, 23, you come smack dab in the middle, 24.50s, and the 24.50s are going for 61 cents, which is still more than 2%. Okay? If I sell, wait a minute, if I sell the 29s, the 26s, oh, what the hell, I might as well just stay where I am. The 26s are paying 29 cents. That's still over 1%. And the stock is down. Remember, I bought it at $25.97. Now it's down to 23. But the 26s are still paying 29 cents, which is still over 1%. So I don't have to dollar cost average down. Does AEO have earnings this week? That I do not know. I cannot answer that question for you. I honestly, I don't pay attention to earnings. I've seen positive earnings where stocks go down. I've seen negative earnings where stocks go up. Earnings really don't affect the stock as much as you'd like to think. Okay? Okay, so we have two more to go. LUV and CC, and that will be it for tonight. LUV, Southwest Airlines. Okay, first thing I want to look at is 2684, what I can buy it for. The closest one's been 27. Yes, over 1%. I like Southwest Airlines. But look at this. A year ago, 30. Jumped up to 39, dropped down to 22, jumped back up to 35, and now we're at 26. Oh, wow. That didn't hurt as much as it did a couple of days ago. But it still felt pretty good. I'm sorry, it's almost 2.5 hours, and it still felt pretty good. All right. All right, so let's look at the last 90 days. All right, 90 days ago, here we are, way up here, 35.10, something like that. Big drop from 35 down to the 28. That's another big drop, over $7. Sideways, another drop right there on, what was that? Let me bring this over here. On the 25th. Wow. Okay, so let's look at the last 30 days. This is the last 30 days. 30 days ago, we're at 27. She dropped down to 25.60. Shoots on up. That's the bottom right there. Okay, 4 weeks ago. 4 weeks ago is the bottom. Nice escalation to the top. Look at that. Sideways drop down. Even though Friday was a green day, it was still at the bottom. Okay, 26 was at 40. So yeah, Tuesday, if LUV is to the upside, that would be a yes. Troy, you got to go. Have a good day there, Mr. Troy. Thanks for stopping by. Come back again every night from 9 until 11:30. Bubba, 70. Good night. All right, so if you like LUV, the 27 is going for 33 cents. What is that? Let's do a little bit of creative math. 33 cents divided by 26.83. Grand total of 1.22%. Okay, now, if you've been here all night, you know as much as LUV is a good trade, there's a bunch of other companies that are paying better than this one. Doc, when is the dividend date for LUV? Good question there, Doc. LUV. Not in May. Not in April. All right, the first week of the third month. So that would be in June. '18th of June there, Doc. Okay, so remember, Tuesday's the next trading day. I have no problem whatsoever going 3 weeks out. Okay? Right there, 18th. Okay, tomorrow's the 27th. There's no trading tomorrow, but the 28th there is. I have no problem whatsoever jumping into LUV. Alrighty? Last one for the night is going to be CC. Chemours. 2650. It's going to be a no, but I'm going to explain to you that in a second. I want to see if they have how many dividends they actually have. Dividends only. Nine years. So here's a question you have to ask yourself. Do you want to invest in a company that only has 9 years of dividends? Not increased dividends. Take a look. 2015, 55 cents. 2015, 3 cents. 16, 3, 17, 3, 18, 17 cents. 18, 25, and then say 25. It's been 25 since 2018. Are you shitting me? All right. Number one, the company only has not even 10 years worth of dividends. That's number one. Number two, they're not consecutively increasing their dividends every year. That's a big no for me. Okay, 26 to 27s is going for less than 1%. You'd have to do a limit order in order to get your 1%. But look at the chart. Here's your high way back in July. Here's your bottom way back in March. Big, huge drop. Look at that big, huge. That's a huge drop from 28 down to 16. That's huge. Let's just isolate that. All right. So we have a couple of gaps from a couple of weeks ago. Okay, we gapped down on the 13th or the 14th. What is that? From 30 down to 26.50. That's $4 on a $30 stock. That's pretty big. And here's the big one. From 28.59 to 15. 28.59 to 15. That's a 50% drop overnight. For your information, they have a spinoff from Dumont. They want a spinoff from Dumont. Okay, from DuPont. I get no problem with that. However, they don't have consistent increases on their dividends. That's one of my main focuses. 20 years of increased dividends. Okay, so they're a spinoff from DuPont. Maybe I might cut them some slack. Litigation scare, bounce right back. Okay, fine. But still, if they're not sharing their profits and they're not consistently increasing their dividends, there are too many other companies that do. Now, I can't invest in every single good quality company out there. I have to come up with a list. And my list is pretty simple. 20 years of increased dividends and weekly options. With those two criteria alone, I went from 9,500 stocks down to less than 300. Those 300, I throw it into the calendar. Okay? The calendar tells me what to buy, what to look at, and when to look at it. So if I have 300 companies and you squish them all into the calendar, okay, there's 66 trading days per quarter. 66 trading days per quarter, that's all there is.
Okay, so you have 300 companies stuck into 66 trading days. All right, so tomorrow, Tuesday, I'm only picking up 2 new stocks. That's it, just 2. But I have all these to choose from. Okay, so which ones do I pick? Well, I got a list right here. 11. I got 11 here, okay, that we found together, you and I. And then I have all these to choose from. The 26. So here, all right, so here we go. Here. Oh, look at this one. OXY, NVDA, Hewlett Packard, Colt, AIG, DVN, CAA, has Coca-Cola, Macy's, MO, which is Altria, and NOV. No, I think it's Novstar. So many good ones for next week. I'm excited. Julie, I only get a little bit excited because I can only pick up 2. That's it. I mean, I have all these here to choose from. Okay? But I'm pretty sure who I'm going to go with. But I'll figure that out on Monday. Okay? I'm probably going to go, I don't know if I'm going to go with Macy's because Nordstrom's is offering a better premium. So is Kohl's. There was one that was offering 4%. So it always comes down to the numbers. Okay, first of all, it has to be a good, decent stock to make my list. This is just my personal list. You guys have to figure out what list is good for you guys. Okay, now this is just mine. Okay, I've collected this list over the last couple of decades. Each and every one of those companies, I would probably invest in with no issues. But the numbers have to work. Not only the numbers, it has to be the right time. And what do I mean by the right time? What do I mean by the right time is, what is the chart telling me? Here, the chart's telling me we got a high over here, okay, right around 29, but 4 days for the downside. Okay, I don't like 4 days to the downside. Okay, see, your high's over here on the 13th. She comes over on the 21st, 22nd, 23rd, 24th. Down, 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 down. It's an awesome bottom when it finds the bottom, because we don't know where the bottom's going to be. It could be Tuesday, it could be Wednesday, it could be Thursday, it could be Friday, it could be next week or the week after. I'm still waiting for Macy's to hit 1950 or lower. Why? Isn't Macy's at 20? All right, wait, I'm a little confused. Why are you waiting for Macy's to hit 1950? Okay, it's at 2025. I mean, is that too high? Or are you waiting for it to come down? Because wait, next week, Macy's is a contender for next week. It seems night to me. Well, it is night, Wade. It's Sunday night. It's like 11:30 Sunday night. So you're right. It seems night to me. But I'm thinking you're going to be high. Yes, it might be high for you. But for me, it's not, because right now it's at 2018. The high of the year is 22. What is that? $22.10. Okay, so the high of the year is 22.10. CVS. I think CVS was a no. CVS 55.70 to 56s. CVS is a no. Sorry, CVS is a no. Only because if I'm buying it for 55.70, the closest strike price is going to be 56, and it's going for 40 cents, which is not even 1%. All right, so we're going to wrap it up. It's 11:30. You guys have a lovely evening, and we'll see you again tomorrow night. I'm actually going to enjoy doing nothing tomorrow. I think I'll sleep in late. All right, all that being said, you guys have a great night. It's a pleasure chatting with you. I got to make it through a whole night with not too much pain at all. You are so good today. Thanks, Doc. Love M, though. than my best profit maker. Well, alrighty then. That's good. Alright, Al. Catch you guys tomorrow. Hey, Doc, I'm going to give you a buzz if that's okay. Alright, we're done with that one. That one's done. This one's done. And now, share my insights. La, la, la. See you later, Brett. Nice for you to stop by. Denise. Hey, well, Denise, come on back. You know, I'm here to teach. That's about it. Okay? Wow, that was horrible. Dividend investing for weekly cash flow using pre-qualified dividend stocks that give a 20 years of increased dividends or more, making it easy for me to attain a 1% weekly return.